We will be discussing the current conflict between Iran and Israel and how it could affect the markets, more importantly for traders. We are kind of on the brink of war, people say.
It'll be nice for things to settle down over over the next couple of days, wouldn't it, and get some clarity? Because that's the thing, we can deal with most things. Humans are very resilient. It's uncertainty. That's what rattles people.
Yeah, very nervous times, but nothing that should really, I'm not saying shock people, but market moves can be analysed.
The markets are driven by humans, and humans respond very rapidly to the fear that they feel. And that's no different in the financial markets.
Hello everyone and welcome to another Hola Prime podcast. Today I'm joined by our performance coach Lara and our trading coach Ian, where we will be discussing the current conflict between Iran and Israel and how it could affect the markets, more importantly for traders. So it's a really touchy subject. We are kind of on the brink of war, people say, right? Brink of world war. But from a trading perspective, what are your thoughts? I mean, sorry, first let me ask how you guys are both doing. I haven't even asked how you're doing. Apologies.
I'll let Lara go first.
Doing well, thank you, Sam. Not too bad. Yeah. Unsettling news to say the least.
Yeah.
But yeah, not too bad. And we've got a nice sunny day here in the UK today, so not too bad. And how about you?
Yeah, all good here. Volatile markets, obviously, sort of mainly last week. We're seeing sort of periods of consolidation now. I think markets are anticipating or waiting for the next move or the next tweet from the US president,
Yeah.
which seems to be sort of at the forefront of everything at the moment. But yeah, very nervous times, but nothing that should really, I'm not saying shock people, but market moves can be analysed, and it's nothing that seasoned traders, if you like, haven't seen before.
Mm.
Might be quite sort of hair raising for novices and people that have just started in their trading journey, but fortunately or unfortunately, I've been at it for sort of 30 years, so I've seen sort of volatile markets like this
Yeah.
quite a few times.
Absolutely. I think that's probably one of the biggest takeaways is volatility. There's nothing scheduled, so to speak. Like you said, one tweet from Donald Trump or
Yeah.
can cause massive amounts of volatility across the market. So you have
Mhm.
to kind of be very cautious when trading. I would say lower your risk massively. Don't trade as if it's just a normal everyday. Be a bit more and really keep in touch with the news. Every little development that's happening and try and think how can this how are people as a whole going to be responding to that? I think
Yeah.
that's very important. But if you are a novice trader, I would say it's not impossible to trade, of course. I mean, volatility can create opportunity in the markets, but it can also create a lot of risk. So just keep your
Mm.
wits about you, keep your stops nice and tight, don't over leverage, and yeah, fingers crossed, hope for the best, really. I
Mm.
guess you could probably stick to some of the more obvious ones like oil. If the war does continue and keep going, oil is generally speaking, historically, is going to go up, especially a war in the Middle East, where a lot of the oil is actually, where it comes from. There could be supply issues, so to speak, and it could definitely, raise the price quite drastically. Gold is another one, a safe haven in times of, you know, instability. So, some of the obvious ones might be quite good, but yeah. What are your thoughts, Lara, on because you're
Yeah. Yeah, well, when you mentioned volatility, and when we talk about volatility in the markets, we're talking about spikes and sort of rapid price movements. The volatility index, though, interestingly, is down significantly from where it was in April.
hmm,
It was at almost 50, I think. I've got really high numbers recorded. I think it was like 42 pushing towards 50. And right now it's down at like 20. So when we talk about volatility, we're talking about fear, aren't we, essentially? And the markets are driven by humans, and humans respond very rapidly to the fear that they feel. And that's no different in the financial markets because, you know, fear is a survival response.
Yeah.
And so what's happening when anything is uncertain is that we have a fear-based response, a fear-based reaction. We saw huge fear in the markets with the tariff stuff back in April. But interestingly, yes, there was a spike at the end of last week, I think, in the volatility index and that fear spike. But actually, we're not seeing too much there. And the markets seem to have been reasonably resilient. The German market came down quite significantly, gapped down on Friday, but it was already heading down. And
Mm.
quite a lot of the other markets were kind of in areas where, such as crude, and we've seen massive spikes on that, but it was already in an area where we would have expected a bounce, to be fair. So maybe that just added a little bit of sort of extra push. But I think crude started to break out on the 6th of June. So this is way before. But I'll leave all that to Ian. But I think what I'm thinking is about how fear means that people are going to move their money because it's an existential threat. It's not just fear of kind of what's happening to you and survival, but actually money is tied into that. And so, people have got their futures tied up in that, their pensions, their 401ks, or wherever their money is currently being held. So we will definitely see a shifting in that. And of course, you've talked about money sort of probably piling into gold. And I guess we saw that. We've been seeing that for quite a long time, even though gold has been consolidating a little bit from the point that it reached,
Yeah.
35. But certainly crude and natural gas, which are the two main resources that are potentially under threat. Humans respond unfavorably to the idea of scarcity. I mean, it makes them react emotionally. So if there's any question around the scarcity of natural gas or oil, which I know at the moment the action is all around sort of Persian Gulf, and they're talking about whether they're going to extend that to the Strait of Hormuz. But you know what? I think if the US gets involved, it's going to take everything to another level, and I do think that the fear levels will go up again. So yeah, that's what we're dealing with, isn't it? A human
Yeah.
response to a threat, and then what you see people moving, they're taking their money out of some assets and putting it into other ones. But interestingly, the equity markets have remained reasonably strong, actually. They've
Mm.
had a little bit of reaction, but hasn't we certainly haven't seen the huge dips that we saw before. But
Mm.
yeah, that's my take on how people respond. I think fear is massive and it actually drives most of what we do as people. And absolutely, it's not just sort of big time investors in the markets. There are people who have real kind of future money tied up in the markets, and so that kind of affects how they're positioning themselves. I should imagine right now, and then that will affect the price that we see in the day to day. But from that perspective, I'll hand over to Ian, I think.
Thanks,
Interesting.
Laura. I agree entirely, and what you said about the VIX index is really interesting. Normally, in times of sort of turmoil, market disruption, etc., we get traders buying safe havens. So, gold, obviously, the natural one, especially for sort of retail investors, focuses on gold. That's actually ticked lower yesterday, and I think it's going to tick lower again today. So that's sort of showing that there's a bit of consolidation. There's a bit of uncertainty. But saying that, normally with uncertainty, you will see a move higher in gold. But you are seeing that period of consolidation. Normally, currency traders, they'll buy safe haven Swiss francs. They'll buy safe haven Japanese yen. That
Mm.
that that that's not working. That's not happening at the moment. And that's, I think, is quite a telltale sign with regards to sort of the stock indices in particular. Normally, stock indices move lower. It's inversely correlated with the Swiss franc and the Japanese yen. And yesterday we saw a move higher in dollar yen, which is
Mm,
under the current circumstances is quite strange. When I'm looking at the charts at the moment, the dominating factor, like Laura said there, is oil. It's about supply. It's about the Persian Gulf. There was a tanker, I think, that was on fire either yesterday or the day before. And that is, really, it's a concern for all oil supplies. From a technical perspective, um, I see US crude consolidating. It's in what technical analysts call a fourth wave correction as far as an Elliott wave pattern is concerned. It does sort of forecast that we are going to see another spike higher. I think tomorrow, from sort of my timing perspective, is going to be a big day. I don't know why, but I think if we see a dip lower in oil, then it's going to offer a decent buying opportunity tomorrow, and then potentially getting up towards, your $84, $90 mark for US crude oil and WTI. But again, what Lara said, you're looking at stock indices, they're just in the sideward track at the moment.
yeah.
When you're looking at dollar products, the euro dollar, sterling dollar, I think we can see a push lower in both of those products, which again means that traders are buying the US dollar. But we've also got to remember, just from a purely sort of trading perspective, we've got the Fed tonight. So
Yeah.
is this consolidation in front of the Fed meeting? Widely expected to keep everything on unchanged, but the forward projections are going to be quite important. I can actually see the US dollar moving higher. Is that going to be on the back of the Fed, or is it going to be on the back of safe haven? But, when I'm looking at the charts, like I was saying before, Swiss franc, Japanese yen normally get bought up quite aggressively as a safe haven product, as well as the US dollar. That's not happening. So I think it's going to be a dollar story. I think that we're going to see my charts say, a dip lower today, probably again in oil. But is that just going to be dominated by the US dollar? And then I think that gold's going to move higher.
Mm,
So, I've got some key levels for dip buying in gold. I've got some key levels for dip buying in US oil. And that says to me, this is going to escalate and it's going to be a timing issue as far as traders are concerned. But how long it's going to last for, I think it's going to be limited.
mm,
I think, when you look at the news, and of course, I have News Squawk on and Bloomberg and everything else, but I'm not going to say it's background noise for me. I know that sort of news moves markets, but it's the charts that I concentrate on.
yeah.
And they're sort of saying, the volatility index, I think it's going to stay quite low, but we are going to get pushed higher in oil and gold. But I don't think we're going to go to sort of dizzy heights. I don't think we're going to see gold at new all-time highs.
Mm,
And I think that once this, I'm not going to say it's going to be short-lived because I don't believe that's going to happen. But I think once we get up to these sort of levels, there's going to be consolidation again.
Mm.
yeah. It's very interesting. I mean, I really do like the psychological aspect of it, as you mentioned, Laura, earlier, because you also got to, okay, it looks like we could be heading down to, a larger war, especially if the US, UK, other European countries start getting pulled into it. That could definitely, well, that would be probably one of the most major wars we would see then in a very long time. At least probably in my lifetime, I would say. So how that would affect the markets, well, that would kick everything off, I think, quite drastically. But I feel that a lot of people probably don't think that will happen. I think you got very conflicting opinions. Some people are almost adamant, yep, World War III is about to kick off. Others are saying, yeah, but is this just a little, because we had it last year. Iran and Israel did exchange a bit of missile fire, but it ultimately didn't, really go
Yeah.
go much further than that. Is it just another little kind of a month or so, bit of missile fire, and then everything cools down? Potentially. But it really depends on what the broader sentiment is.
I agree.
Um,
I think it's going to take another country to get involved to for the escalation to really sort of boot off.
yeah.
I mean, when you sort of look at the news, Israel has taken out a lot of Iran's anti-aircraft, places. So at the moment, that it seems that Iran is probably on the back foot, um, and. But Iran, as you were saying earlier, is very close ties to Russia. They'll be watching the situation pretty closely. The US have got these huge bombs that can sort of take out the nuclear enrichment places. So, with I think without those two sort of major players or other major players getting involved,
Mm,
it's quite isolated at the moment. But like you
Yeah.
say, when you get Trump tweeting that what did he say overnight? That that the Iran supreme leader is alive for now. I mean, that's
yeah.
there's nervous talk.
Yeah.
Yeah.
I think from a psychological perspective, the way that we kind of operate is that if you're kind of a little bit removed from it, the news settles in. Does that make sense? Like there's an initial response to it, and we would see that, and we would see that in the markets, and then the next thing is how does this affect me? That's a natural human response.
Yeah,
And then we kind of come up with our plan B, whatever that might look like, and then we kind of just get back to a level. That tends to be how humans respond to threat. So, if you look at sort of the Russia-Ukraine situation, not much really has changed, but people stopped talking about it after, wrongly, in my view, but people
yeah,
stopped talking about it after a while because it's not a direct threat to them as individuals. Now, that's how we're built. But so when you start saying it's happening, it's you have that initial fearful response, but then if the US gets involved, that takes it up another level. So then all of a sudden you have a new kind of fear response to that situation because now suddenly it feels bigger again. And so kind of, that will escalate things quite a little bit more. How long that lasts, I don't know. But the thing is, humans generally want to be optimistic. They want to kind of settle in and they want to kind of, the market wants to price it in. People just want to kind of deal with the news, process everything, understand what that means for them and their loved ones and for their immediate, future, and then move on. And that isn't, that's just how we're built as human beings. It's a survival
Yeah.
instinct. So you're going to see that initial response and then things settle in.
Yeah. No, absolutely. And I think you're absolutely right, Ian, as well. It will take another country being pulled in
Yeah.
for it to really kick off. Whether that country would be the US, because okay, if the US does get pulled in, it depends how much they actually participate. I mean, if it's just helping Israel defend current missiles, if it's just supplying more weaponry. But if it's actually active troops, that would be a major escalation, I think. And it really then comes down to the response of Iran's allies, Russia, like you mentioned, potentially China, both countries that have nukes, I believe, which would then really kind of, I mean, this is the first time, where nuclear weapons are involved in a major conflict, so
Another
to speak,
level.
right? We had, the large major war, you could say it was World War II. Okay, nukes were technically used in World War II, but they were, only the US had them at that time, right? But would that help? Would the deterrent of potentially nuclear war actually stop countries from entering this war? I should hope so. I think most people just want peace. No one wants war, um, especially as traders as well. I don't think we particularly want the volatility of war either. So yeah, it's a really interesting one. It's hard to predict. You just have to kind of keep your eye on the situation. I do think, like you mentioned, what Trump tweeted, I don't think that helps the situation at all. But then
Mm.
again, is that just Trump being Trump? In his first term, he had a lot of back and forth with Kim Jong-un, the North Korean leader. But then at the end, they kind of made peace, right? So is that just Trump being, himself? He does tweet quite erratically
Yes.
sometimes. He does say stuff that a lot of people be like, "Oh, shouldn't say that," but then he never really, actually truly goes through with it. So it could just be that. Whether he's serious about bringing the US into a bigger conflict, um, I I really don't know. I really don't
Yeah.
know.
Yeah,
I really don't
it's
know.
hard to know, isn't it? Because he people have got used to the tweets, and I think that's not to say that you shouldn't take them seriously, but off the back of having somebody like Biden who would say if he said something, you kind of felt like he would follow through with that. So
Mm,
there's been a period of adjustment, hasn't there, to the way people operate and how they kind of run their shop, if you like. And
yeah.
so there has been a little bit of a kind of, okay, this doesn't necessarily mean that. Um, and but it's understandable that when President of the United States tweets something, the world's going to react in some way, aren't they?
Yeah, no, absolutely.
Mm.
Scary times, scary times. But moving back a bit to the markets, I am quite interested in. I know none of us are true crypto experts,
Yeah.
but I am quite interested in the crypto market and how it could potentially respond. Because this will be the first time I believe that crypto would really be involved in a major conflict, and it's kind of mature enough now to be kind of considered a proper asset to trade, especially
Yeah.
Bitcoin. When I say crypto, I kind of mean just Bitcoin. Obviously, I'm not talking about the small altcoins and the meme coins. That's another thing. But yeah, it would could Bitcoin potentially become the new gold in terms of a safe haven? It's an interesting one. I mean, it's kind of unreliant from the central bank, so to speak, and it's kind of has its own infrastructure. It's the blockchain. It could be more safe in a lot of people's in a lot of people's eyes to kind of put their money in for a while, at least part of it,
Yeah.
diversify. Who knows?
No, I personally think that it would probably shock the market. I think you'll probably see a sell-off in Bitcoin.
Hmm.
And I think that would basically just be, I mean, from a technical perspective, that's the way that I see it going anyway. But I
Hmm.
think that it's predominantly owned by speculators. It's predominantly, retail. Um, and I think that if we do see sort of a kick-off and a run to sort of safe haven products, I think that retail traders in particular will liquidate assets,
Yeah.
and I think you'll get a knock-on effect whereby stop losses are taken out, and you just where's the bottom? I think you could potentially see it going down towards your 85,000 mark potentially.
Yeah.
I don't think it's going to be. I think gold will shine again if it does. If we do get an escalation, I don't think people will be running to Bitcoin. That's my personal opinion, but
Yeah.
I heard a statistic this morning that said that with the recent unrest, that they had seen retail diversification move gold investment from like two on average of 2 to 3% to now standing at 5 to 7%.
Mm.
So that's quite a big shift, isn't it, of
Yeah.
people who
yeah,
never really had gold as part of their portfolios
Yeah.
and
yeah.
now are actually moving that way for sure.
Can,
Yeah.
can we share a couple of charts?
Yeah.
Mm.
Absolutely. Absolutely.
Let's see what we've see if this will work. So
Yep.
this
Perfect.
is this is US crude. This is WTI contract. So this is a daily chart. So obviously we've seen this sort of impulsive move to the upside. This was 13th of June, so this was this aggressive day. Obviously, if you look at ATR, which is the average true range, it's well above it. You can see the sort of ranging candles here, and then we got this sort of impulsive move to the upside. Now there's sort of weekly resistance around about sort of $74.28, and we're just sort of holding into that at the moment. But I think these 2 days, last 2 days of price action, they're still big sort of trending candles, but they hold within the range from the 13th of June, and that's really important from a technical perspective. If you go down to a weekly chart, those inside candles will just look like a doji style candle
Mm,
on the weekly chart. So that basically a doji style candle, if it's an inside day or an inside week, it just highlights indecision. It basically says, right, the market's waiting for the next big move. And like I said, these inside days, you don't really want to be trading them
mm,
because you're just going to get chopped up inside that range. Now, what I do have is sort of a support zone down here. So you've got $67.72, $67.41. Considering the range trading that we've had, or the ATR, how much we've been seeing the volatility in oil over the last sort of 3 4 days, that's quite a tight confluence zone. And normally, when you get those tight confluence zones, they hold quite well. So we've just got this confluence zone here. Now, again, what Laura was saying about fear and greed and traders. Um, moving markets on the basis of fear and greed, and also on the basis of supply and demand. Elliott wave analysis is a great technical tool that highlights that. And what basically happens is you get these impulsive moves to the upside, and that's either on fear and greed and supply and demand, and then you get these periods of consolidation, what Elliott wave calls, a fourth wave correction, and then you get this last impulsive move to the other side. Now, unfortunately for a lot of retail traders, they get caught in this area. So as it breaks wave three, they look for a wave breakout. They then think that this sort of upward pressure is going to continue. And all that happens is that smart money that have been accumulating long positions in this sort of period here, they liquidate here, and retail traders get trapped,
yeah.
expecting it to move higher, and all that happens is it actually corrects lower. So when I was sort of saying earlier about, yes, I can see an escalation in the short term, but in the long term, I think we're going to see a topping out
Mm,
in US or maybe around about sort of $81. And fear and greed. So if we go to, let's just move this out of the way. So if we're looking at gold, um, and again, sort of when you look at the watch list, basically the red or the products that have got an amber light next to them. Amber basically means I'm getting ready to go, and
hmm.
red means I've sold it, or blue means I've bought it basically.
Gotcha.
And gold is something that I'm looking at today. But I think this is probably going to be on the back of the Fed not not the escalating tension. So basically, what we have here again, impulse move to the upside. This is a shorter timescale chart. There's some support here between 3359 and 3354. This is a chart formation called a Gartley. So
Hmm.
what happens is it comes down, hits wave B, moves higher. Maybe that's on a bit of risk off. So again, a bit of fear with traders buying gold, and then a move down to this level, which is 3327. So for me, if you're looking at a long-term sort of buying opportunity, or a level that I'll be looking at over the long term for gold, is around about $3,326. But this pattern would have to complete. I don't just, if it goes straight to that support level, then I won't be buying it because I haven't seen this formation. Um, but sort of the dominating chart is definitely US crude as opposed to
Yeah.
anything else, stock indices, etc.
Yeah, no, absolutely. I mean, I find it fascinating. Sometimes the markets can actually tell you what news is going to come out before it comes out. We had
Sometimes, yeah,
that just before Israel attacked Iran, on the live session. Me and Eamon, we both spotted huge iceberg orders on the depth of market. Lots of sell pressure come in, and it was building up. A lot of pressure was building up, and we both said something was just odd. It was different. It didn't look normal. We just saw that build up happen, and then overnight it
yeah.
plummeted.
It's the
And
tea leaves, isn't it, Sam?
yeah, the move happened before everyone knew. And I mean, look, we would we would be lying if people who obviously have knowledge of what could potentially or is going to happen don't take advantage of that knowledge. It happens. So it is good to kind of keep your eye on the market, see how it's responding. If it feels different, if it looks a bit odd, be prepared.
Mm.
That's certain people gearing up for a move that they
Yeah.
kind of anticipate or pretty much know that it's going to happen. So yeah.
Just going back to that oil chart that we were just showed there, and it was talking about the ATR, the average true range. A lot of traders, and I think this is quite good for retail to look at this as well, is that a lot of traders will look at the ATR, which is the average true range of the day, as a potential stop loss. So when we're talking about risk reward and actual, where should I put my stop? Where should I put my target? You want to be looking at, as we all know, risk reward factors around about 3R, which means, you're risking 1 unit to potentially gain 3 units. That can still stay the same, but you just need to lower your amount that you're trading per point, per cent, per whatever it is. That. And if you're taking it off an ATR, I think oil's quite a good example at the moment. The ATR might have been 50 cents
Mm.
14 days ago. It might be $2.50 now. So, look at the ATR, look at expand your stop loss to that level. So if it was 50 cents before, it's $2.50 now, you should be trading in a fifth of the size, basically, is what I'm trying to say.
Yeah.
It's still the same trading opportunity. It's
Yeah.
just managing your money a little bit better.
Oh, 1,000,000%. 1,000,000%. Yeah. You
Yeah.
have to adjust your position size to match, like you said, the ATR and how much
Mm.
the market's actually moving. Because if you just look at the candlesticks, so you can't really tell how much it's moved, comparison to like last week, without actually measuring it yourself. You could do
Yeah.
that, or the
Mhm.
ATR just does it for you,
Mhm.
which is lovely. But
Yeah.
yeah, I guess any other closing thoughts before we wrap it up?
Mm.
No, I think the Fed's going to be good tonight.
Yeah, yeah,
Um,
It's a federal holiday tomorrow, isn't it, as well?
it
So the US
is. So
market
yeah.
I
won't be
think I think the
trading.
market's going to be a bit calm.
Yeah,
No, I could see already in the indices. It's
bit
the
muted.
volume's quite low, yeah, but that's normal for FOMC.
Yeah,
That's completely normal. So I don't
yeah.
think that's out of the ordinary in any way.
So how do you approach trading on an FOMC day, Sam? Do you wait? You
Um,
don't trade the equity open hour?
I will look at it, but I will be much more. I'll be looking at much more of a short-term scalp, like a really short-term
Oh.
scalp. If I see a really nice opportunity that lines up, everything looks great on it, then I'll take it. Really
Mhm.
tight stop, but I'm not going to be looking for, large moves or holding it or anything like that,
Mhm.
until obviously the news comes out. And
Yeah,
um, yeah, so I'm very cautious, but it's kind of a nice break day. And then tomorrow, like you said as well, close, so another break. I've got 2 days
yeah.
off.
It'd be
Effectively.
nice for things to settle down over over the next couple of days, wouldn't it, and get some clarity? Because that's the thing, we can deal with most things. Humans are very resilient. It's uncertainty. That's what rattles people. When you know kind of what you're dealing with, you usually can you just kind of get on with it and you make your plan and you move forward. It's the uncertainty that rattles things. So it'd be nice to
Absolutely.
get some kind of idea of where things are headed anyway. So
Absolutely. Well, Lara, Ian, It's been a pleasure talking to you both and getting your insights
Always.
into the whole situation. I've definitely learned quite a bit, so it's always good.
So have
And I hope
I.
the viewers as well have taken on board what all of you have said, because I do think ultimately I agree with both of your stances on it all. So yeah, it should be interesting. But yeah, um, thank you guys for coming on.
Thank you
We'll
Yeah,
guys.
it's
do this
been a
again
pleasure.
very
Nice
soon.
to see you again.
Yeah,
Yeah.
Nice to
absolutely.
meet you,
Thank
Lauren.
and you. Thank you for your time.
Cheers.
Thank you guys.
Take
And
care. Have
to
a
all
good
the viewers, thank you guys for watching. If you did enjoy this video, do leave a like, subscribe, turn on channel notifications, and also join our Discord. There's a button down below in the description. It's completely free to join. And within our Discord, we have a great community full of other traders like yourselves, all sharing great trading ideas. Got live AMA sessions with our coaches and lots of other cool stuff. So it's well worth joining. But apart from that, thank you guys for watching, and we'll see you again very soon. Take care.
Hola Prime, trade with transparency.